Hello. Um, I had a busy week. That's why I disappointed with the timeline. I wanted to send the video a little earlier. So I'm going to have a long session with this class, and I'll send a couple of other classes like alongside this one. So let's get right into it. So we've gone through a series of topics today. What we are going to look at is called time institute. Time So time is a very important aspect of trading. Just like in every aspect of our life, timing is very important. So you could do the wrong thing at the right time and get away with it. You can also do the right thing at the wrong time and get into trouble. Timing is very important. So I can give so many examples, but this is something that we are all familiar with, that timing, the time you choose to do certain things can have an influence on how positive or negative that thing is. For a very simple example that comes to mind is when you try to, let's say, cross the street around 12 a.m. Around 12 a.m., if there is a busy street and you're crossing the road at 12 a.m., there might not be a lot of cars, so you can walk, especially like for streets that are like mostly really busy and there's a lot of cars during the day. Around 12 a.m., there's just one or two cars. Like, you could like take your time and cross the road slowly without getting into trouble. But this same road, a different time in the afternoon or in the evening, somewhere where the road is busy and there are cars speeding a lot on that road, that same road could get you into a lot of trouble. But I can give a lot of examples, but I believe that this is the concept that most people are already familiar with. So what we are going to look at today is to throw more light on timing of trades. So you can learn so many things about trading, but one thing that can help you to master and make really good trades, especially when it comes to the Forex markets, is timing. So we are going to look at two aspects of timing. The first aspect is called days. Days of the week. And the second aspect is market sessions. All right. So on the days of the week, it's going to be really simple. We're going to look at the days of the week, which we are already familiar with. So the days of the week, we have what? Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and then Sunday. These are the days of the week. I believe we all know this. So the Forex market is not open on weekends. So on Sunday it is closed. On Saturday the market is closed, which means we have only 5 trading days. That's what we are going to focus on. So the market will start from Monday, Tuesday, Wednesday, Thursday. So for stock market, the Forex market, these are the days that you can trade them. But for volatility of fixed trading, you can trade it every day. And then for crypto too, depending on the broker you are trading with, you can also do crypto every day, Monday, Friday, Saturday, anytime. But with the stock market and Forex, you can only trade them on Monday, Tuesday, Wednesday, and Friday. All right. So today we are going to look at which days are best for trading within these 5 days. So the first thing is there is a question about Friday. and there's a question about Monday. It doesn't mean you cannot trade on these days, but especially as a beginner, these times are not times you should be looking at trading. And I'll give you the reasons shortly. Right. So Monday is the first day of the week, right? So a lot of things are happening on Monday. That's why it makes Monday a little confusing, especially for a beginner. It doesn't mean you cannot trade on Monday, but because of a lot of things that is going on Monday, it is not ideal for trading. But after some time when you trade and then you master the market and you figure out all the various tricks and you are good at analyzing the markets, you can actually trade any day that you want, right? So Monday is the first day of the week. First day of the week. Right, the first day of the week. And it's so what is happening here is that it's also the day just after the weekend. So when we are trading Forex, we are trading currency, right? What happens is people, as so far as people continue to spend money, there is going to be up and down movement with the currency. So far as people continue to travel from one country to another, people buy goods with their credit card from another country and it gets shipped from another country to another country. There's always going to be fluctuations in the currency. That is how, as Forex traders, we are able to make money from all these kind of transactions that is going on based on the up and down movement that is going on in the markets, right? What happens is it is the central banks, like the banks in the country. So like every country has a central bank. These banks are the ones that is recording whatever transaction that is taking place within its currency. What happens is that on weekends, those transactions are not recorded because the central banks are closed on the weekend. So even though there is still exchange going on within all the currencies, these transactions are not recorded on the weekend. So Monday being the first day of the week, when the market opens, the market already is the first day of the week. So there is going to be transaction for that very day, which is transactions that is going on Monday that needs to be recorded in the market. And all the weekend transactions that were not added to the market because the central banks were closed would be added to the market on Monday. And if the Friday being the last day that you can trade the market, if there were some transactions that were supposed to be added on Friday, but because there were too much transaction and maybe the bank closed early or something happened and all those transactions were not entered. Because Monday is the first day of the new week, all those transactions are going to be added to the market. So mostly what happens on Monday is the moves that take place is a whole lot of movement that is influenced by so many things. Moves from transactions that were entered into the market from the previous week, transactions that were entered into the market from the weekend, and transactions that were entered into the market for that very day, which is Monday. Right. So that is Monday. So all this makes Monday trading very tricky. And especially as a beginner, you don't want to be playing around this time, right? So for those of you who are already trading, and maybe this class might be a way to just polish a few things for you to better your trading. If you're okay and like you have a good understanding of the market, you can still trade on Monday. But one thing I'll tell you is that anytime you lose a lot of money in the market, it is either going to be on Monday or Friday. If you have friends that have been trading for a while and they said they've lost money, ask them. It's not like you lose all the money on Monday or Friday, like those that have lost a lot of money. you see that most of them, about 70% of them will tell you that the money they lost were on either or on a Monday or a Friday. That should tell you something about these days. Right. So let's go straight to Friday. So Friday is the last day of the week. Last day of the week. So the market wants to round up for the week after all the movement is done for that week. It needs to like round up and close the week. So mostly there are certain moves that the market wants to complete, and it's in a haste to do that. So there is a lot of random movement that takes place on Friday, similar to what happens on Monday. So it makes Friday trading also a little tricky. And mostly, if I end up explaining what swap is, so when you are trading, there's a small charge. So I don't know, I think I've already mentioned broker in one of my explanations. So a broker is like your network provider. If you want to make phone calls, you need a MTN SIM or Airtel SIM, or depending on which country you are, you need to get a SIM card to be able to make calls and text and use the internet, right? The same way, if you want to trade, you need a broker to be able to access the market. So there are so many different brokers that you can use, just like the way there are so many like network providers you can use to connect to the internet or browse or make calls and text. So the broker will charge you a fee to be able to make trades. So when you charge a fee, there is the fee that you pay. You pay for swap and spread. So a quick explanation. This is not what we are looking at, but just because I mentioned it, I'll just give a quick overview of what these are. So you pay what we call swap. So if you have a trade, let's say you take a trade today and you don't close the trade today, and you keep it overnight, and the trade is still in the market for the next day, you pay something small, like just a few cents for carrying the trade overnight. That is what we call the spread charges. But there is positive and negative swap. Sometimes instead of paying 50 cents or something, there will rather be 50 cents added to your currency, depending on which currency you are buying. There are certain countries that when you buy, you get positive swaps. So instead of the broker charging you, you rather get like small money like added to your account instead, like those swaps. So we call those one positive swap. We have what we call spread. So spread is like there's a small difference between the price of the currency you are buying and how much exactly it is on the financial market. So your broker puts like a few cents on it, so that the difference between the actual price and the price you are buying it for, that small difference is like more. a big deal. But there are people that are trading like hundreds of millions and billions of dollars, and those 50 cents can translate into 500, and it can become 5,000. And then if you're trading big accounts where you're paying $5,000 on your swap and all those kind of things, those ones are very significant. So those are the people that we are actually targeting. Right. So it makes Monday and Friday not really conducive for trading. I'm not saying you cannot trade, but especially as a beginner who is trying to now figure out the market, you might not find these days as interesting as the other one. So what I'm saying is, at this stage where you are trying to learn, ideally you want to stay away from trading Mondays and Friday and focus on Tuesday, Wednesday, and Thursday. You don't have to trade every day to make money. You just need to trade at the right time and catch the right moves to make money, right? So if you're trading just Tuesday, Wednesday, and Thursday, it doesn't mean you're going to make small money, because most of the moves that happens on these days are very clean and safe for you to trade. And if you are making money and you are losing less money, that is good. It means you're actually making more money if you are losing less money. It's better than making more money and losing more money, right? So you try to keep your trades as minimum as possible, but very quality. So Monday is mostly referred to as a confusion day. A lot of confusion going on based on all those transactions from the previous week, the current week, and the weekend. And then mostly what you see on Fridays is market. On Tuesday, the market starts to show you the kind of structures that you need to analyze. So refer to Tuesday as a formation day, and this is the best day to start analyzing your trades, to start looking for position to buy and sell. This is the best point to start looking for to buy and sell. Wednesday is the best day to trade. The best day to trade is on Wednesday. Why is it the best day to trade? Mostly after the market does the formation of what he wants to do on Tuesday. You can trade on Tuesday as well, but on Wednesday, most of the time, the market starts fresh moves. So maybe fresh moves. And this day is also referred to as a reversal day. So what do I mean? Sometimes you see the market maybe from the previous week going up. Let's say this is Tuesday. Market comes here, pushes down. And on Wednesday, it can go down for the catch it right on Wednesday. So mostly Wednesday is a good time to trade because you are likely to get in at the time where the market is looking to move in the direction that you are looking at. It's a good trading day. And it's also referred to as a reversal day, which means the market mostly change direction around Wednesday. Now continue your trade for the new actually going to continue. So Thursday is also referred to as continuation day. So mostly Thursday would continue what Wednesday started. So Wednesday started pushing the market down. We're likely going to see Thursday continue with that, also pushing in that direction. I hope that makes sense. So these are the days of the week. Very important that you take of Monday and Friday, not being night, and focusing on Tuesday and Friday. You can actually continue. You don't want to trade that for the session. You need to. We are diving right into the other part of time and season, which is the market sessions. And that will help us understand what I was talking about in terms of the other parts that we are looking at. So it will help you understand when the New York session. So I said on Friday, you want to be trading before the close of the New York section. So I explained what the New York section is in the market section shortly.